That we discussed about the trading sessions and the times of trading, really simplifying the process. I want to talk a little bit about swing trading versus intraday trading. So those are two terms that are mainly used in trading. Intraday trading means just taking intraday positions. So let's say entering in the morning and just exiting until the market closes. And then swing trading is the way we trade over a few days or a few weeks. To be completely transparent and honest with you guys, swing trading is not that good anymore. Swing trading was really good 3 or 4 years ago before all the COVID shit happened. After that happened, the market really got destabilized. Dollar took most of the market's basically direction. If dollar goes up, then the whole market goes down. It's really manipulated. So swing trading is really hard to enter, especially trades over a few days. We will have we'll have times where we hold a trade for more days, more than 1 day, but those cases are quite rare. So we're not going to have trades that are running over a few days that often. The main reason for that is because most likely you guys, and the goal of this program and this mentorship is to get you funded. So on a funded account, it's not really good to hold trades over the days because most have an equity based drawdown. So if you're in profit 7% for the day and then the next day the price pulls back 5% and you're still in profit 2%, you fail the account and you get suspended. So for prop firms, because we use those in order to leverage our own personal account, for funded accounts it's best to just close the trades at the end of every single trading day. I don't think I ever held a trade for more than 2 days on any funded account. For personal accounts and flip accounts, I like holding them because the swap is also smaller and you also want to aim for bigger moves. So let's say last week actually, I flipped a 1K account to 10K account on IC markets. So for that, I just used lower lots and then just held the trades for a few days. No, I think it was like 2 weeks. So last month I now hold a trade for 2 weeks or 3 weeks because the swap was smaller. I had a higher time frame target that I knew was going to hit, so I just used a swing trade for that. But for the main accounts that we're going to trade, and which are the prop firm account, the funding accounts, we're most likely going to just go for intraday trades. Now, we're going to separate this in two, because we have 2 trades every day. Like I told you, we have 2 setups, so London and New York. The way we're going to manage the trades, so the way I do it in my trading plan is, if I take an entry and I take a trade during London session, I always scalp it. So I always close it before, usually 90% of the times, I close it before New York. The reason for that is from my data, again, that my whole trading plan is based on data and what I've seen over the years. London session usually gives you a nice move. So it gives you, let's say, 10, 15 pips, 1 to 2, 1 to 3. And then usually it pulls back and gives another entry for New York. So usually when you enter a trade during London, it goes in profit and then it comes back to your entry and takes you out at break even or even stops you out. So for that reason, in my trading plan, I had added a new rule, which is if I take a trade during London session, I always close it when it goes in profit. So I aim for a 1 to 2, 1 to 3 if I have a smaller stop loss. So that in pips usually means on Euro USD, one of the main pairs that we're going to trade. I usually aim for 10 to 15 pips. Maximum is 20 pips if price is generous. And then the second setup that there is in the day, so the New York setup, again backed by data, is that New York, when New York gives a trade and gives an entry, that trade usually, if you manage to enter it, usually have the low or the high and you have the best entry. So you can hold the trade longer without any risk. And also the New York move is usually bigger than the London move. So that for that reason, when we enter a trade during New York, we can just hold to our initial targets or even higher time frame targets. For example, because I entered the trade here, let's say on Euro USD, you can see I only the move. So the first hour of New York Open, it moved 20 pips. So we could just take profit there. And then we could hold toward the higher time frame target, which for me is this level. Now this trade is probably going to take a few days, so I'm not just going to aim for that. Usually New York gives a bigger move, 30, 40 pips. So let's say my first target is this area right here. I could just hold it because I know this entry is safe and it's not going to get retested. If the entry gets retested, so if price comes back down here, most likely price will continue lower. So there's no more reason to stay in a buy. So that is the difference between New York and London. In London, if you, let's say, enter the sell here, price can come back and then continue even lower just because it's London Open and that's what it does. Or you can have the drop, then price just makes a range, and then New York comes in, takes out the high and then drops really hard, and you're just left with a stop loss or a break even, and price drops in your direction. And for that reason, you secure profits on the sell here. And then if New York comes in, gives you the confirmation for the sell, you take the sell again, and you just hold it toward the higher time frame target for a bigger riskier and a bigger move. That's what happens all the time. You see here, perfect example, London dropped, and then it came right back up, would have stopped you at break even or even a stop loss, and then price, you can see in New York, dropped hard. So for that reason, for us, every trade we take during London session is going to be a quicker trade. So we're going to close profit as fast as possible. We're going to go over the targets when we go more in depth into our trading. We're going to use the sessions for targets, the highs and lows. And then when New York comes in, we're just going to take a better trade that we're going to hold until our take profit, until our targets, hold it longer because we have more confidence into it. So basically, that's the way we're going to trade. If you do want to take swing trades, if you want to trade, let's say the 4-hour time frame, because you don't have a lot of time to spend daily on the charts, we're going to go over that after we finish the whole course and give you guys some examples on how you can also trade the higher time frames. Trading the higher time frames are good, but for us, the main trading strategy is going to be from the 4-hour all the way to 5 minute, 1 minute for entries, and even the seconds per confirmation. So again, my main focus on this program is to get you funded, but also to make you understand how the market moves and how you can use all the tools you have in order to be profitable and trade any market. The way I look at it, there's not really any trading strategy that's a winning trading strategy. It's just your trading plan. And the thing that I'm going to teach you, the concepts that we use, the way we trade, is to make you understand and have all the weapons available in order to go against the market and win every single day, even if you want to trade on the 1 minute, even if you want to trade on a 4-hour. So that's the main way that I found from mentoring my 800, 900 students from Romania. That is the best way to teach you guys, because that way you can develop yourself, you can create your own trading plan, and then become profitable over the long run, no matter the market conditions. So saying that, let's go over into the next video.